The dollar index seems to be pushing higher and on the doorstep of that 106.4 level we've been talking about recently. Let's talk about whether or not dollar has room to expand higher and what that could mean for all other areas of the market. I'm talking about indices, of course I'm talking about commodities like silver and gold, and what it could do to other currency pairs. So let's go ahead and jump into it now. Also, I did want to remind you guys before we get into this video that we are currently running our discount sale for the VIP membership. This is ending very, very soon. It ends in just over 48 hours. So if you haven't already taken advantage of this, the VIP membership is currently 55% off. It is our biggest discount of the year to come join in the group, come trade alongside myself, Frank, Ivan, and the rest of our gang. If you haven't joined it already and you would like to, here's something for you. We're going to do, again, 55% off. If you use the first link down below in the description, you get 50% off with the promo code down there. But if you chat with a rep by using the first link down there, you can get 55% off the membership. And that is the biggest discount we do all year long. So don't miss it. Welcome back to another video, guys. As we get started, I do want to just ask if you could hit the thumbs up button down below. It does help just to support my content. And if you're new here, I invite you to subscribe, come back and hang out with us on a regular basis. We put out videos like this throughout the week. So this morning we did have new home sales, which came in lighter than expected, which in the very short term caused a little bit of a pullback in the dollar. But overnight, the dollar was really, really strong. So I want to talk a little bit about the technicals when we take a look at the DXY first. And what we'll see here is that, again, when you take a look at the daily chart, seems like we may be making a push for that 106 area, that 106.4 specifically, which is the previous level of resistance where there was a lot of selling pressure. And what we can see here too is that there has been a series of higher lows in this market. And now with this fresh breakout, the question will be whether or not this continues to close strong. If so, if you get a candle that looks, kind of like this, there's a good chance that we could squeeze up into that 106.4 level ahead of the big events that happen later on this week. Of course, I'm talking about the GDP numbers that come out tomorrow, as well as unemployment claims, and on Friday, the core PCE price index number, which is a measurement of inflation that matters a lot to the Fed. But between now and then, it does seem like for now, the dollar index looks strong, and we'll have to wait to see what those data points print to get some clarity as to where the dollar might head next. I'll say this about the dollar index before moving on. If you get PCE numbers, and that's probably the big one of the week, if you get PCE numbers that are hotter than expected, meaning inflation is very sticky and problematic, it's possible that that dollar index could set new highs and break through the 106.4 level. If we don't see that, if we see some cooling in inflation, the opposite could be true, and we could see the dollar kind of roll over and perhaps head back to retest that 105.2 level. So I do think PCE numbers are very important to the market, and you may be asking, well, Nick, which way is it going to go? And my answer to that is always the same. I do not know. I don't predict the future when it comes to economic data points that are coming out, but I use them as kind of a way to guide general directional bias. So if we get PCE numbers that are really hot, it could lead to more upside in the dollar. What could that mean for other currencies? Well, for the euro, it could mean continued downside. Same thing for the pound dollar, and for the dollar yen, it may continue to push this thing higher after now hitting and breaking through the 160 level against the yen. And at the same time, it may continue to push down on my gold trade, which is not going very hot. Now, I want to talk on this because on my stream today, I've already gotten the hate comments. I know the hate comments will roll in anytime I talk about a trade that's not going particularly well for me, but I wanted to get out in front of it because, I've been doing this for a long time, both trading as well as doing it publicly on YouTube. And I can tell you, it won't be the first time that if this trade breaks to the downside and I get stopped out, that I'll get a bunch of trolly comments telling me that, Nick, you suck at trading and all this, that, and the other. But let me just say that if this breaks to the downside and does not hold this 2300 level, that does not mean that gold is just set to crash from there and that I'll completely give up on being bullish on gold. What that actually means is that I need to, again, I've set my risk for a predefined amount, and this is just being, prudent with your risk management. If I get stopped out here, it is not a big deal in the grand scheme of things. This year, I've had a lot of great trades on gold, and I've made some pretty good money overall. I caught the 2300 bounce. I rode this upward trend in early portions of the year, and if my win streak kind of comes to a close here, then it is what it is. But for me with gold, this is a decision-making breaking level, this 2300 level. If it holds for the bulls, then great, we may squeeze higher and start to see that expansion. But if we break this level, then it is going to be a signal to me that I need to pause on gold bullishness. And you might say, well, Nick, how did you not see this on the technical side? It's so obvious with hindsight in your favor. But the point that I want to get across with this is that, yes, the 2300 level is a key level support. There's no question. It is held very nicely. Nobody knows if the 2300 level, by the time this video comes out, it might have changed, but nobody knows for sure if this level is going to break or not. I think there's a pretty good chance that we do see this thing bounce, but if we don't, again, I know what I'm going to do. I'm going to stop out and take a controlled loss on my position and move on to better opportunities. That's the name of the game when it comes to trading. At the same time, silver's not particularly working out well for me. However, we are sitting also at a key level of support on the weekly and daily chart. As long as we hold this level, I'll stay in silver, but if we break it, it's time to close the door and move on. And again, this is Trading 101. I show you this on my channel, not to, really I show it because I know traders out there who comment those sorts of things like, Nick, how could you not see it? It's so obvious. You, just like me, deal with losing streaks, drawdowns, mistakes, and I don't even think that this is a mistake according to my strategy. Actually, it certainly is not. I stuck to my rules, but you can stick to all the rules and still mess up and get it wrong sometimes. So we'll see what happens with gold and silver. If it does break the lows, I'm out. I'll take small losses and move on, and we'll go from there. Speaking of indices, also, if this dollar index does continue higher, keep an eye on this, because if the dollar index squeezes higher from here, if we see 106.5 break, for example, the S&P 500 is probably going to see some downside, because what that would do is it would call into question whether or not we are really going to get rate cuts this year. The expectation is for one rate cut this year, but if you get really hot PCE numbers on Friday, it could throw a wrench into that story, and the S&P 500 would certainly be a little bit concerned about that, to say the least. That being said, if we do get a broader pullback, I do like the idea of getting long the S&P 500 and some specific sectors inside of the market. The NASDAQ bounced back yesterday off of the prospect of, well, Nvidia is bouncing, but today we're seeing a little bit of a rollover effect. Watch Nvidia for, in my opinion, a potentially leading example of what's going to happen in the market broader speaking, because, at the end of the day, yes, there are other strong companies in this market, but other companies didn't really get us here. It was really Nvidia that got us to see such a bullish market this year. The AI kind of demand for chips has been so strong. I think you want to see that continue for the NASDAQ to squeeze higher. And if you lose the Nvidia trade, it draws real questions as to whether or not the overall rally can sustain itself in the near term. Longer term, again, I don't think Nvidia will be, make it or break it for the market forever. But for now, I think it is. So watch Nvidia. If we get a squeeze down, if we break through the lows, could be an interesting story as markets may see a broader pullback. Here's a look at the current top setups on the Edge Finder. We see US 10Y. This is the US 10-year Treasury bond. Gold is still getting a bullish rating. AUD/USD creeped up, and I want to take a look at that. SPX is getting a bullish read. The Russell's getting a bearish read. Copper, GBP/CHF, NZD/CHF, and Euro Swiss getting bearish readings here on the Edge Finder's top setup scanner. I want to look at AUD/USD for a second. So the Australian dollar last night actually had hotter than expected inflation statistics. Let me show you. So CPI for the Australian economy was expected to be 3.8%. Instead, we got 4%. And this is partially, in my view, why gold saw a little bit of a sell-off overnight. Was hotter than expected inflation could lead to more hawkish central banks globally, which is not particularly good for gold. That being said, it does look good for the Australian dollar, and that showed up in the scoring of the Edge Finder. That is why this thing popped up as a potential bullish setup. You can see that inflation, this column, got a nice strong print because of the advancing inflation in Australia. So that stubborn inflation could lead the Australian dollar to stay strong relative to its peers, and it's giving us a reading here. So again, we saw a big spike up initially, but then have given back those gains. Here's my opinion on the Australian dollar against the US dollar. In terms of the currency trade world, this is the only one that's really setting up potentially, which would be and this is what it would look like for me. A breakout through those highs, if we get it, could actually look to continue, in my personal opinion. because again, inflation is very important to the broader story. If you get hot inflation from Australia, it may lead them to not cut interest rates as quickly as other peers. And again, we have US inflation data coming soon, which will be very important to whether or not this, the dollar strengthens or weakens, which contributes to this currency pair. Alongside the dollar, we also see yields jumping here today, which is not really great for my TLT position. You can see I've given back some of my gains on this one with this recent dip, but I do think that TLT has room to continue higher. We'll see where that goes. Here's an update on my Bitcoin trade. I did enter into Bitcoin recently off of the weekly chart. This is a bit of a longer term trade for me, if I can stay in it. I mean, if Bitcoin crashes, it won't be a long-term trade, but I do like the idea of potentially seeing upside for Bitcoin. I have a small position on the account. I liked this level of support here, and we'll see if we can get it bounced. This was alerted inside of our VIP membership group. As I mentioned at the beginning of this video, you can currently get 55% off on that using the first link in the description. And speaking of links in the description, as we close out this video, I did also want to let you know that down below in the description, we have several links for brokerages that I personally like for people inside and outside of the US. Now, these brokers will give you special sign-up perks if you choose to use and support my channel with the links down below. But on top of that, you can also trade directly with all of these brokers on tradingview.com, which is super convenient. It's something I personally do, and it makes trading so much easier to just be able to click buys and sells directly within the TradingView platform. So if you use TradingView and you're looking for a better brokerage, check out the ones down below in the description. You'll be supporting my channel, and I greatly appreciate it. Thanks for watching. If you're looking to improve as a trader, we've got some cool free resources here that I wanted to share as we close today's video. Down below in the description, there is a link to join our Discord channel or our Telegram channel, and we also have our website, a1trading.com, where traders can get access to free course material to help you improve as a trader. Remember, we are also live Monday through Friday on this channel around 9:30 a.m. US Eastern, broadcasting most live news events and that sort of thing. So hope to see you there. And also, we do have a couple videos here showing up on the screen. If either of these seems like it might be helpful to you, then make sure to click here or here, and we'll see you there.